Okay, now in this webinar session, the series of webinar sessions, okay, my objective is to cover the latest past exam question. Okay, latest past exam question means we will be doing the past exam question of the latest attempt. That is September, December 21. Okay, so you can go on the ACCA website, like here. You go on accaglobal.com. ACCA AFM past papers, because your subject is AFM. And you go in advanced financial management papers. There is a past exam library. And in that past exam library, there are latest past papers. Okay, so we will be attempting the September, December 2021 exam question. Okay, so this September, December 20 question, I want you all to download it so that when I read on the screen, you also have the question. So please just take out a minute and download this question. Or you can see from the screen, it's your choice. Yes, the recording will be available, so don't worry about it. Okay, so we are starting the question now. Okay, so once you will open this advanced financial management examination question, and even when you will open this question in the real exam, there will be an instruction screen, get to know your exam. So obviously you have to carefully read the So I was saying, when you will open this question in the real exam and your real exam will begin, then you will be firstly getting this instruction screen. So you have to carefully read the instruction example. At the moment, I'm skipping these because we can't waste time on these instructions, but do read these instructions carefully in the exam. And after the instruction screen, this is a very long instruction screen, your exam summary scheme will come that there is section A and section B. And then the section A summary scheme comes, all the instructions, and this is question number 1. Okay. Okay, so section A, question number 1, firstly comes, okay. It states the following exhibits available on the left hand side of the screen provide information relevant to the question. The following exhibits available on the left hand side of the screen provide information relevant to the question. Number 1, exhibit 1, Zichi company policy failures. Okay. Exhibit number 2, the new project discount rate. Exhibit number 3, the new project cash flows. Exhibit number 4, financing the new project. And exhibit 5, the future project funding. Okay. This information should be used to answer the question requirements within your chosen response options. Okay. So again, I think if you see, it states that the following exhibits available on the left hand side provide information relevant to the question. There are 5 exhibits in this question: Zichi policy failures, new project discount rate, new project cash flows, financing, and future project funding. Information should be used to answer question requirements within your chosen response options. Okay. There are requirements. I am not reading the requirements now, because after the exhibits reading, I will read the requirements. These are all the requirements making this question worth 50 marks. Okay. But let's start reading the exhibits first so that we get a sound idea of what the question is exactly all about. So this is the information in exhibit number 1. This is the information in exhibit number 1. Exhibit is just the information portion. There are 5 exhibits. No need to worry. People get worried about what exactly these exhibits are. You don't need to worry on exhibits. Okay. Exhibits 5 means there are 5 pieces of information, 5 blocks of information. So you will be shared information in 5 portions, 5 screens. Exhibit 2, second portion of information. Exhibit 3, third portion of information. It just exhibit is splitting the information into multiple areas. Otherwise, if there is all information on one page, then there is no exhibit. But this is just providing in separate windows. Okay, so let's start. The question states, Zichi company is a large listed engineering company. Okay. So exhibit 1 is saying that Zichi company is a listed engineering company involved in the development and manufacture of environmental friendly products for businesses worldwide. Zichi is a large listed company involved in the development and manufacture of environmental friendly products for businesses worldwide. Until a few years ago, the value of its shares had been increasing steadily and it regularly outperformed its main rivals. So until a few years ago, it had been increasing steadily. The value of its shares, it regularly outperformed its main rivals. However, more recently, its shares have been underperforming and many financial analysts are recommending that Zichi shares should be sold. Okay, Zichi's investors are becoming increasingly concerned. Okay, so until few years, it regularly outperformed its main rivals. However, more recently, its shares have been underperforming, and many financial analysts are recommended that ZT shares should be sold. So until a few years ago, it was going very good, but now many financial analysts are saying that their underperforming shares should be sold. ZT's investors are becoming increasingly concerned. Obviously, investors are also concerned. The analysis concluded that this underperformance was due to 3 policy failures in the company's financial strategy as follows. So there was an analysis why there is underperformance. In the past, you were regularly outperforming. So what has happened? So there was an analysis, and analysis concluded that this underperformance was due to 3 policy failures in the company's financial strategy as follows. Number 1, ZT does not undertake post-completion audits of its investment projects. Number 2, ZT has used a fixed discount rate of 10% to assess all investment projects for some years now. None of the company's senior management can remember why this rate was chosen. And number 3, ZT has continually funded new investment projects using equity finance, and the analysis concluded that this financing strategy sent the wrong signals to investors. Okay, so the summary of this exhibit is that ZT was a large company. Until few years, it regularly outperformed its rivals. Share price went up, but now shares are underperforming. So there was an analysis that why this is happening. So the analysis concluded that this is because of 3 policy failures. Number 1, they don't undertake post-completion audits. Number 2, they use a fixed discount rate of 10%. And number 3, they fund investments using equity finance, and this sent the wrong signal to investors. Then there's a second portion, exhibit 2. So exhibit 2, it's just continuation of information, nothing else. ZT is considering a new project to manufacture environmental friendly motor scooters which are fully carbon neutral. So it is considering a new project to manufacture environmental friendly motor scooters. This is the diversification into a new business area. Okay, diversification. So you know, diversification and regearing needs to be done, in which it has no previous experience. ZT's CFO is of the opinion that ZT should determine an appropriate discount rate for the project based on an initial assumption that project will be all equity financed. So finance officer is of the opinion that ZT should determine an appropriate discount rate for the project because you are entering into a new business area. He wants to determine an appropriate discount rate based on initial assumption that the project will be all equity financed. Layu company would be a competitor to ZT company as it manufactures environmental friendly motor scooters as well as equipment for wind farms. Approximately 60% of Layu's business is in manufacturing motor scooters and remaining 40% is in wind farm equipment. Given below is the most recent financial information relating to Layu company. Share capital 0.25, 2 million. So that means number of shares are 40 million because 80 million. Because 20 million is the capital, 0.25 par value divided number of shares, 80 million. Reserves 27.436 million. Market value of equity 172 million. Market value of debt 48.26 million. Equity beta 1.2. This is the information for Layu company. Sanvenue company is involved in manufacture of equipment for wind farms. Now, carefully pay attention. Layu company manufactures scooters as well as wind farms. You are going in motor scooters. ZT is going in motor scooters. Layu makes motor scooters as well as wind farms. Sanvenue only makes wind farms. So don't mix up information in 3 things. ZT is manufacturing motor scooters. Layu company data is given. It manufactures motor scooters as well as wind farms. And Sanvenue manufactures only wind farms. It has a cost of equity KE 15.4%, 20% debt, 80% equity in market values, risk-free rate RF 4.8%, risk premium 8%, tax rate 20%. This is information in exhibit number 2. Okay. Just a second, please. There is some audio issue. Just a second, please. Okay, so we have completed 2 exhibits up till now. Okay, the first exhibit stated that the company is on verge of poor performance because of 3 policy failures. Okay, and the second, it's entering into a new contract and stuff like that. Diversification and information for Layu was given, which deals in both scooters and wind farms and sand venue. Okay, let's move forward. Exhibit 3. Zichi expects the new manufacturing environmental friendly motor scooters to last for 4 years. Okay. So when you're entering into a new project, it expects that scooters will last for 4 years. Project will require an immediate expenditure of 70 million from plant and machinery. After the project ends in 4-year time, it is anticipated project will be sold for 42 million inclusive of any inflationary increase. So it's basic that investment requires 70 million and in 4 years time, it will be sold for 42 inclusive of any inflationary. Following estimates of revenues and costs relating directly to the project have been made. In the first year, revenue is expected to be 10 million and then increase to 40 million in year 2. In the final 2 years, revenue will grow by 20% each year. This is very easy. Costs are estimated at 120% of sales revenue for the first year, 80% of the revenue for the second year, before reducing to 40% of the revenue for each of the final 2 years. Costs is given. Substantial initial working capital of 10 million will be required at the start of year 1 of the project. Subsequently, working capital of 15% of revenue for that year will be required at the start of the years 2 to 4. And the remaining working capital will be released at the end. This is some basics investment appraisal. Zichi pays tax of 20% every year. Tax is payable with the year's delay. There is delay in taxation. Any tax losses from project are set off against the company's profit from other projects. Losses are set off. Okay. Tax allowable depreciation is available on the expenditure on plant and machinery for the project at an annual rate of 15% on reducing balance. Capital allowance is 50% reducing balance. It is anticipated that plant and machinery will have a scrap value of 20 million at the end of project, and this realizable value is included in the project's estimated sale price of 42 million. Okay. Now remember, when we invest 70 million in plant and machinery, after 4 years, the project will be sold for 42 million. It is anticipated that plant and machinery will have a scrap value of 20 million. Plant and machinery scrap value is 20 million, and this is included in sale price of 42 million. So exhibit 3 also hangs here. Exhibit 4. Due to the positive environmental nature of the project, see, it was environmental friendly motor scooters. So due to the environmental nature, Zichi can obtain the entire funding for the project to a loan at a subsidized rate of 180 basis points, that is 1.8%, lower than the estimated risk rate of 4.8%. Okay, so entire funding can be through a loan, and the loan is at a subsidized rate of 1.8% lower than risk-free rate of 4.8%. That means you can get loan at 3.3%. Okay, risk-free rate is 4.8%. Okay, you can get the loan at 1.8% less than the risk-free rate. So you can get the loan at 3%. Normal borrowing rate is 6%. You normally borrow at 6%, but here you are getting at 3%. Zichi has decided project should be entirely funded through subsidized loans. So we will fund whole project at 3%. Issue costs which need to be paid are anticipated to be 3% of the gross finance. Issue costs are not allowable as tax deductible. Obviously, tax deductible is only allowed if issue costs are raised from debt. Here you are financing the project through subsidized loan, so issue costs are not allowable as tax deductible. We get a tax benefit on debt, but here the issue costs are not allowable as tax deductible. Given that new project is to be funded by subsidized loans, Zichi CFO is of the opinion that the adjusted present value of the project would be more appropriate than the conventional NPV based on risk-adjusted cost of capital to evaluate the project. However, he cannot explain why this should be the case. CFO is saying APV would be better than NPV, but he cannot explain why this is the case. Exhibit 5. Zichi's board of directors is considering whether to raise funds for the forthcoming projects either through new debt finance or through asset securitization. So board of directors is considering whether to raise funds via debt or asset securitization. In addition to manufacturing business, Zichi receives rental income on some of its factory premises and its plant and machinery, which it hires to other companies. The board is of the opinion that it should securitize this rental income. I think all exhibits are done now. Let's start section B. I think the section A is done. We read 5 exhibits. And now after the exhibits, we should move towards the requirement. After the exhibits, we should move towards the requirements. So as you all know that section A question is worth 50 marks. So the requirements are of 50 marks. Section A usually asks for the report part. Discuss and justify the actions Zichi should take to address the 3 financial strategy policy failures. 8 marks. Discuss and justify actions Zichi should take. You just don't need to discuss, you need to justify the actions Zichi should take to address the 3 financial strategy policy failures, the actions it should take to address the 3 financial strategy policy failures. Remember, there were 3 policy failures. No post-completion audit. Okay. Number 2, for using fixed discount rate of 10%. And number 3, raising entirely financed by equity. So you need to discuss the actions which we should take. Obviously, if there are policy failures, we need to address them. So actions you need to take to address the policy failures, you need to justify those actions. Okay. And there is no report requirement, so it's just a theoretical question of 8 marks. People usually get worried by looking at, oh, it's 8 marks. Okay. Simply, there are 3 policy failures. Since this part is related to exhibit 1, I can go and have a look at exhibit 1. See, Zichi is a large listed company involved in development and manufacturing of environmental friendly products. Until a few years ago, the value of shares was increasing. It regularly outperformed its rivals. However, more recently, shares have been underperforming. Many financial analysts have recommended shares should be sold. Investors are becoming increasingly concerned. Analysis concluded that this underperformance was due to 3 policy failures. It does not undertake post-completion audits, uses a fixed discount rate, no one knows why, and uses equity finance. Okay, so discuss and justify actions it should take to address the policy failures. Obviously, there are 3 policy failures. You need to take action against them. So you need to discuss the actions they should take and justify those actions. 8 marks may seem very long, but in reality, split 8 marks in all the 3. 2.66 marks for each policy failure. And 2.66 marks, okay, 2 or 3 relevant points would be enough. So 3 points in the first one, 3 points second one, 3 points third one, you get 8 marks. It's very easy, trust me. Okay, so I will first discuss them and then move towards the examiner answer. So, discuss and justify the actions you should take to address the 3 policy failures. Okay, this is your requirement. Discuss and justify actions you should take to address the 3 strategy policy failures. Now, there are 3 strategy policy failures. Number 1, it does not do a post-completion audit. This is the first strategy failure. Okay. Second, uses fixed discount rate of 10%. Another policy failure. And number 3, all finance via equity. There are 3 policy failures. Obviously, remember, if there are policy failures, you need to take actions to address them. Now you need to discuss the actions which you should take, and you need to justify those actions, why you are taking. Okay, so the first corporate failure, second corporate failure, third failure, there are 3 policy failures. You need to justify actions which they should take to address this. So you should put 3 headings. You should put 3 headings. Okay, and then justify the actions should take. Okay, so there are 3 policy failures. There is no post-completion audit. Action you should take to address this policy failure and then justify. So there is no post-completion audit. if there is no post-completion audit, what action you should take to address this policy failure? There should be post-completion audit, right? If there is no post-completion audit, what action you will take to address this policy failure? There should be post-completion audit. Justify it. Why? If there is post-completion audit, after completion, we know what went wrong. We can then improve it for future. But if there is no audit, we will not know what went wrong, who did wrong, and this lack of information will never help us to improve, resulting in decline in performance. So you see, I gave an action that there should be post-completion audit, but I justified it as well. You see what happens in post-completion audit. You complete a project and then you do audit. Whether we achieve the desired results, if not, what went wrong, who did wrong, and we apply those learning in future projects. Here, the company is not doing any post-completion audit. That means when project is ending and the performance is bad, we are not doing any audit. What went wrong, who did wrong? So everybody knows we won't be held responsible. So they don't work seriously. We don't know what went wrong. We can never improve it for the future. And this will continue to undermine our performance. That's what is happening. Okay, like, for example, I entered into a project, but my manager was very bad. So obviously my project didn't achieve the desired results. I didn't do post-completion audit. Okay, or I am a lecturer. Okay, the markers or the assistants which I have hired to answer student queries, okay, they never reply to student queries, and I never do their audit. So then they know that if we don't reply to student queries, there is no check and balance on us. They won't reply. And do you think this will undermine my performance? Yes. So if at the end of the session I do an audit and fix the responsibility, okay, you didn't reply, you are fired, your pay is cut. They know that after post-completion audit, they will be held accountable. So they will work seriously, and this helps me to improve performance. So one action which you should take to address this policy failure is to do a post-completion audit, and I justified it. Okay, please pay attention. Okay, second, we are using a fixed discount rate of 10%. There is another policy failure that for all projects you use a fixed discount rate of 10%. So what action you should take? Obviously, this is wrong. Using a fixed discount rate of 10% for every project, this is the policy failure. So action we should take to address this policy failure. We should use a specific discount rate for each project. This doesn't make sense that use one discount rate for all project. We should use a specific discount rate for each project. Now, why is the case? Justify the action you are taking to address this policy failure. Every project has different level of risk. Hello? Okay. Now they are using a fixed discount rate of 10% on every project. Now, if you use a fixed discount rate on every project, this is wrong, a policy failure. So action you should take. Action you should take is to use a project specific discount rate. You have studied in NPV multiple times. We never use a same discount rate for all projects. We use a project specific discount rate for each project. Okay, justify the section. You know, every project has different risk. Okay, now using same discount rate for all undermines competitiveness of the project. What does this mean? If a project is high risk, you should use a high discount rate, but you are using 10%. So low discount rate means the NPV goes high. Low discount rate, interest rate low, NPV goes high. We take a bad decision. And if a project is low risk, so you should use a low discount rate, but still you are using 10% high. Using high discount rate creates NPV negative. Again, a bad decision. So it undermines the competitiveness of the project. So you should use a project specific discount rate. Okay. And third policy failure, all finance via equity. This is a policy failure. So you need to take a decision and action to address this. What action you can take to address this? The action you can take: use debt as priority or mix of debt or equity. So if you are having a policy failure, like using debt, using equity, if it's a policy failure, you need to take action, use debt as priority or a mix of debt or equity, justify your action. Equity is believed to be the most expensive source of finance. Remember, those students who have studied from me the AFM exam, I definitely taught them. Equity is the most expensive source of finance. Debt is cheaper. If you're using equity, you're using expensive source of finance, paying high return to equity holders. Okay, debt is cheaper. This is a corporate failure. I have many topics to discuss in this. You know, if you are raising finance via equity, this is the main reason. This is the main reason why it's written your share price is falling. Because if you issue equity, you issue more shares in the market, the prices go down. This is the reason for share price fall. So equity is not preferable. Either debt should be preferred or a mixture of debt and equity should be preferred. Okay, don't consider that these are the full answers which I've written. I've just given you the starting points because a professional student is believed that if he's given a starting point, he should continue that detail on his own. Okay, so please write these key points and do read the examiner answer. You will get an elaborated version. Don't expect that you can write the same lengthy examiner answer. It's just like the post-completion audit. I had more space, so I wrote more answer. So in no post-completion audit, you will get 2.66 marks for this point, even if you write the same my answer. In all finance or equity, I will just create more space and also fill that point. So just 4 or 5 lines would be enough to gain 2.66 marks. Okay, please copy this. If you can take a snap of this so that we can move to the later parts and you can copy it later. I can just add some stuff in finance by equity to justify my action. You can just take a snap of this and then you can copy it later after the class. Then we will move towards the next part. So. Okay. You are done with an 8 marks requirement. Now, the part B, prepare a report for the board of directors of ZTWich. You need to prepare a report for the board of directors of ZTWich. Estimates an appropriate discount rate to use to determine the NPV of the new project based on all equity finance. So report which estimates an appropriate discount rate, 6 marks. Estimates the NPV of the new project, assuming it is all equity financed, 9 marks. Estimates the APV of the new project, 7 marks. Evaluates whether the new project should be undertaken and discusses the assumptions made. Discusses whether APV method would be more appropriate than NPV method, 10 marks. Professional marks will be awarded for format, structure, and presentation format. So see, such a huge part. 6 and 9, 15 marks, then 7, 22 marks, then 32 marks, and then 4, 36 marks. If let's suppose out of these 8 marks, you write such answer that you get 4 marks. And this 32 marks, in which 6 marks is a discount rate computation, WACC computation, NPV computation, 9 marks, then 7 marks APV computation. These are mark scoring areas of 22 marks. Okay. And then 10 marks for discussion, 32, and then 4 marks for professional. If out of these 36, I say that you lose 10 marks, this is not a question in which you should lose 10 marks. You lose 10 marks and you get 26. Still, you are getting 30 marks from this question, which definitely increases your passing chances. And then from section B, you only have to capture 20 marks. Okay, so since you have to prepare a report which estimates the appropriate discount rate, estimates the NPV, estimates APV, and evaluates whether new project should be undertaken, and discusses the assumptions and discusses the APV. Okay, since I have to make a report, you have to follow a report format to gain professional marks. You have to properly follow a report format to gain professional marks. Okay, now to gain professional marks, there should be a proper follow-up of the report. Okay, to gain professional marks, there should be a proper follow-up of report. The format you should follow should be very, very carefully selected so that you earn the marks. Okay, so the report always required should start from the format to, from, date, subject, introduction. Okay, report should also first always start from to, from, date, subject, introduction. Now to, the report is usually addressed to whom? Report for board of directors. So report is for board of directors. from. If it's mentioned that acting as a financial consultant, prepare a report from financial consultant. If it state acting as a manager, from manager. If nothing is mentioned, cross. Date, never mention the date, always mention DD, date, month, year. Okay. Subject should be a 1 or 2 word. Okay. Like new project of Zichi. Or you can write environmentally friendly scooter project. It's just a 2-3 words thing. Okay. Introduction. How to write introduction. People who have studied from me in my classes, I have instructed you carefully. How do you write the introduction? In introduction, we write this report, and then we copy all requirements. This report, and then we copy all requirements. Okay. This report, requirement 1, estimates the appropriate discount rate to determine NPV. This report estimates an appropriate discount rate to find NPV. Okay. It then, obviously there is a second requirement, so it then copy the second requirement. Estimates the NPV of the project. It then, third requirement, estimates the APV of the project. All requirements, write in introduction. This report, first requirement, it then second requirement, it then third requirement. Is there any other requirement? Yes, it then evaluates whether new project should be undertaken and discusses the assumptions made and discusses whether APV would be more appropriate than NPV. Okay, so this is the last requirement. So it then evaluates whether project should be undertaken and discusses assumptions made and discusses whether APV is better than conventional NPV. If there is any other requirement, add them as well. It then continue adding them. Okay. But since there are no more requirements, your introduction portion will end here. Okay. Since there are no more requirements, so your introduction portion would end here. So this is the strategy to earn professional marks, that you write to from date, subject, and introduction. Okay, to board of directors from, if the name is mentioned, fine, date, never mentioned, subject, just new project of Zichi. Okay, and then there is introduction, that this report estimates an appropriate discount rate. This report, you need to mention all requirements. Requirement 1, it then requirement 2, it then requirement 3, it then requirement 4. Okay. Now, after from date, subject, introduction, you should start mentioning the requirements. Okay. Now, put the heading of the first requirement. Estimation of discount rate. Okay. Second heading, estimation of NPV. Estimation of APV. Okay. Fourth requirement, whatever requirements are there, put headings. Evaluation of project and assumptions and whether APV is better than NPV. These are very important steps to earn professional marks, right? To board of directors from ignore date, ignore subject, just 1 or 2 lines. Introduction, this report, first requirement, it then second requirement, it then third requirement, it then fourth requirement. Okay. And then whatever requirements are there, every requirement should have a separate heading. And once you enter headings of every requirement, if that requirement is a computational requirement, you should never perform calculations in the report. You should always refer to appendix. And if it's a discussion requirement, start writing the answer there. Okay. So estimation of discount rate. Do you think it's a calculation requirement or a discussion requirement? It's a calculation requirement. Okay. So appendix 1 shows the estimation of discount rate, which is found to be whatever you found. Okay. Then estimation of NPV. Do you think it's a calculation requirement or discussion requirement? NPV is a calculation requirement. So don't need to perform here. You lose marks. Appendix 2 shows estimation of NPV, which is found to be estimation of APV. We will write the answer once we find it. Estimation of APV. Do you think it's a calculation requirement or a discussion requirement? APV, adjusted present value, is a calculation requirement, so no need to perform workings here. Appendix 3, workings only come in appendix, shows the estimation of APV, which is found to be whatever we found. Evaluation of project and assumptions and whether APV is better than NPV. Do you think it's a calculation requirement or a discussion requirement? Evaluation and assumptions and whether APV is better than NPV. This is a discussion requirement. So no appendix, you can start writing all the discussion here. Okay, so this is the format of the report, which will help you gain professional marks. And after that, we have 3 appendix to solve. Appendix 1 discount rate, appendix 2 NPV, appendix 3 PV. We'll move towards them. Okay, if you want to copy this stuff, you can copy. Okay, so again, you can take a snap of it so that our further time doesn't get wasted. Okay, we just did part A of 8 marks, theoretical stuff, and then we stated that we needed to make a report. So 2 from date, subject, introduction, 2 board of directors, from, leave it, date, leave it, subject, just a small word, introduction, this report, first requirement, it then second requirement, it then third requirement, it then fourth requirement. Once you're done with the introduction, every requirement should have headings. Okay, so you should mention headings of each requirement. If it's a theory requirement, discussion requirement, start writing the answer there. If it's a calculation requirement, appendix 1, appendix 2, appendix 3, etc. Okay, now let's answer the first requirement, estimation of discount rate. And appendix 1 shows estimation of discount rate. So we should go towards a heading in the end called appendix 1. And we should estimate discount rate. Okay. So from here, we will start the working of discount rate. Okay. Pay attention. Now, as far as I remember in the question, estimates an appropriate discount rate. You are expected to estimate an appropriate discount rate to determine NPV based on all equity finance. Okay, you should assume it's all equity finance. So remember in APV, I told you that all equity finance is done basically for APV, because APV has an assumption that the project is all equity financed. Okay, so discount factor used should be KE. If it's all equity financed, the discount factor used is KE, and that is RF plus RM minus RF, not into beta equity, but beta asset. Okay, APV assumes that the project is all equity financed. Okay, so if project is all equity financed, so you do this, that if project is all equity financed, this discount rate is KE, because that's the assumption of APV. And then it's RF plus RM minus RF into beta asset. Okay, so for discount rate, remember all information was in appendix 1 only, exhibit 2 only. So I will go and read exhibit 2. Okay, just a minute, I'm giving it to you. Please read the exhibit 2. Okay, so we have to determine a suitable discount rate, assuming it's all equity finance. In all equity finance, it's an APV assumption. We use discounted SKE, RF plus RM minus RF beta asset. So ZT is considering a new project to manufacture environmental friendly motor scooters, which are fully carbon neutral. This is a diversification into new business. So yeah, diversifying, in which it has no previous experience. ZT's CFO is of the opinion that ZT should determine an appropriate discount rate on an assumption that project will be all equity finance. Okay, so it's the assumption of APV, right? Live would be a competitor to ZT. It manufactures environmental friendly motor scooters as well as equipment for wind farms. So Layu is manufacturing motor scooters as well as wind farms. 60% of Layu's business is motor scooters, 40% is farm equipment. Layu's information is given, and Sanvenue is involved in the manufacture of equipment of wind farms. K is 15.4, financed by 20% at 80% equity, and risk-free rate is 4.8%, risk premium 80%, tax rate 20%. Now, you have to find a discount rate, assuming project is all equity financed, which is an assumption of APV. So in APV, discount rate is K. So K is equals to RF plus RM minus RF into beta asset. Okay. So if you see it here, RF is 4.8% in the question, plus RM minus RF, the premium is I think 8%. And you need a beta asset. Is that the case? 4.8, premium is 8, you need a beta asset. Now, if you are saying that we will be finding an appropriate discount rate, assuming it's all equity finance K, it's RF plus RM minus RF beta asset. Okay. So risk-free rate plus market rate minus risk rate, which is 8%, you need a beta asset. And since you are going into a new business area, okay, it's a diversification case. Okay. So you need to do ungearing and regearing. Since it's a diversification case, you need to do ungearing and regearing. Okay. But in ungearing, what happens? From beta equity, we get a beta asset. And then in regearing, we put that beta asset on our results to get beta equity. In APV, the only requirement is ungearing. Regearing is not required, if you remember, because we need a beta asset here. We don't need a beta equity, we need a beta asset. So we will stop at ungearing. There is no need to do regearing. That's what happens in APV. Okay, so we will be calculating just ungearing. Okay, and in ungearing from beta equity, we get beta asset. Okay, the formula is given on the formula sheet. No need to copy it on the Excel sheet. Okay, beta asset is equals to beta equity into equity portion plus beta debt into debt portion. Okay, You don't need to worry that how will I write it on the Excel sheet, spreadsheet. There is no need to write this formula. Okay, you just have to perform the workings, which I will be doing. Okay, now for beta asset, let's start ungearing. For beta asset, let's start ungearing. Okay, so let's start ungearing. Okay, what happens in ungearing? In ungearing, from the beta equity of competitor, we get a beta asset. Okay, so who is our competitor here? Layu company. Okay, so Layu company's beta equity is given as 1.2. His E&D is also given 17.2 million and 48.26 million. From his beta equity, we will get beta asset. So let's start. We will get beta asset from beta equity. Applying the formula, it's beta equity. So what is the beta equity of Layu? 1.2 into E. So what is the E? 172 over E plus D, 1 minus D. Okay, so E is 172 plus, what is the market value of debt? 48.26 million, and after tax it's 80%, 48.26 million. After tax. Okay, okay, now if I apply those workings in the formula, I get a beta asset as 1.2 steric 172 over 172 plus 48.26 steric after tax 0.8. Okay, 0.98. This is my beta asset of competitors data. Okay, ungearing. Now, in normal cases, if that's not an APV question or the assumption that it's all equity finance is not written, we do regearing. Put that beta asset in our own results to get beta equity, and then put that beta equity in KE formula, you get K. But here, no need to do regearing. Once ungearing is done, you get beta asset. You put that beta asset here to get a K, and that's it. That's the discount rate in all equity finance or APV. But there is a problem here. You cannot do this here. In normal circumstances, you could have done this. That you got the beta asset, put that beta asset above. Only ungearing is required. No need to do regearing. Put that beta asset, that's it. But here there is a problem. This is the beta asset of competitor, Layu company. Right? This is the beta asset of Layu company. That's through ungearing, because beta equity was given, we ungeared it and got beta asset. But the problem is Layu company is dealing in two areas: wind farm and scooters. See, motor scooters as well as wind farms. 60% is motor scooters, 40% wind farm. If Layu company was not involved in both these, we are making motor scooters. If Layu company was only dealing in motor scooters, from simply is beta equity, we ungate beta asset, and that was it, because that beta asset reflected motor scooters. That's what we need. Here the problem is the beta asset you have generated of Layu company. This is equals to beta asset of motor scooters plus beta asset of wind farms. Okay, and motor scooter is 60%, wind farm is 40%. 40% is wind farm. And 60% motor scooters. Okay, so you ungate and got a beta asset of Layu. You should have put that beta asset because that's what we need. But the problem is the beta asset you got of Layu is involved in two areas, scooter as well as wind farms. So the beta asset of Layu is the beta asset of motor scooters as well as the wind farms in proportion 60 and 40. We cannot use this. We need beta asset of only motor scooters. So we have the beta asset of Layu. We need beta asset of motor scooters. If we get the beta asset of wind farms, that would be it. We have the beta asset of Layu. We need the beta asset of motor scooters. If we have the beta asset of wind farms, that would be it. How do we get the beta asset of wind farms? So in the whole question, there was no information regarding beta asset of wind farms, but it stated Sanvenue company is manufacturing wind farms only. Its KE is 15.4, it's 20% at 80% equity by market values. Okay, so what you can do is that since it manufactures only wind farms, you can find the beta asset of wind farms from here. Okay, but KE is given. So for Sanvenue company, KE is usually RF plus RM minus RF into beta equity, usually. Not in APV, but usually. So KE of Sanvenue is 15.4, RF is 4.8, plus RM minus RF is 8%. You can get the beta equity of Sanvenue company. Okay, so solve this to get the beta asset of Sanvenue company. It will be 15.4% minus 4.8%. 10.6 divided by 8%. So it will be 1.325. This is the beta equity of Sanvenue company. Okay. And once you get the beta equity of Sanvenue company, okay, you need beta asset because Sanvenue company is dealing in wind farms only. You need beta asset of wind farms. So what you can do is you can use this beta equity to get beta asset. So beta asset will be beta equity 1.325 into what is the E&D of Sanvenue company? 20% at 80% equity. So E 80 over D 80 plus 20, and that's after tax, right? 0.8. Okay, so you will get beta asset that is 1.10, and once you get beta asset as 1.10, that ends your job. So beta asset of Layu company 0.98 is now equals to bracket open beta asset of motor scooter, which is 60%, plus beta asset of wind farms, that's just calculated 1.1 into 40%. Okay, rearrange it, you will get beta asset of motor scooter only. That is coming equals to 1.1 into 40% minus 0.98 divided by 60%, 0.9. So you put that 0.9 of scooter only here. Okay. You will get your desired K. 12%. Okay. Any questions you can please ask, else you can note it down. Once you copy, then I can answer your questions. Okay, don't worry. It's the latest past paper, Mosam, and I will be sharing the WhatsApp group link again because some students joined late. And I have a question. Yes, Afan, if it's not given all equity finance is the assumption of APV. Then we do ungearing and then regearing. Okay, and regearing you get beta equity, and then in KE question you also apply beta equity. Okay. So since it's a very long question, and obviously we are doing it very slowly, in very slow step by step. Okay, so I will end this session now. Okay, and till exam day,